Nvidia's AI summit in Washington, D.C. is wrapping up today and nearly propelled the shares to a new all-time high. The company is focused on energy efficiency and enterprise software as they work to avoid being boxed in as just a processor company worth a couple $1 trillion. Meanwhile, Foxconn is announcing plans to build the world's largest manufacturing facility for a key component of Nvidia's Blackwell platform. Here to discuss is Stacy Rasgon. He's senior analyst at Bernstein. Good to have you, Stacy. Let's start with the big picture takeaways on Nvidia after this D.C. summit. The shares almost kissed that new high or made a new high this morning.
Yeah, they did. Look, I mean, people are getting excited about the story again, especially as we approach earnings and then year end into next year as their new platform, Blackwell, really starts to ramp. And look, by all indications, their own commentary, all the supply chain checks and everything else, demand for this product just looks off the charts. And you know, it's usually a good time to be owning Nvidia into the launch of a product cycle, and that's where we are right now. And this cycle, if the checks are any indication, has the potential to be massive. So people are getting really excited about it.
And maybe it's just a kind of near-term technical analysis, but I listened to Katie Stockton. She says, you know, maybe it's range-bound for now. Maybe we go back under 100. You know, there's been a lot of excitement and a lot of hype. And when I know about Blackwell, you think, well, most people know.
Yeah, I mean, the last time it went under 100 was when there were some rumors about some delays to Blackwell, some redesigns to some of the chip components that are on it. And as it turns out, there were some issues. They were able to sort of work through it in a relatively quick fashion, and it kind of turned into sort of a nothing burger, at least from the standpoint of the trajectory of the ramp. It doesn't look like it slowed anything. But that was the last time it went under 100. Short of anything like dramatic like that, I don't know if we see that anymore. Like I said, at this point, the indications that the numbers are much more likely, I think, to have an upward bias than a downward bias. And I suspect that's true for the stock as well as we get into the ramp into the end of the year.
Real quickly, I want to ask you about some of the rest of the space as well. But what do you have for the PE here? I mean, what are the earnings that the market is expecting? Yeah. And what do you think is possible? And what should the multiple be for a company growing like this?
Yeah, the multiple is actually not that expensive if you believe the numbers. I think the sell side's like somewhere around $4, maybe a little more. I suspect the buy side, the investors are higher. They're probably closer to 450 or 5. And again, if you look at some of the supply chain checks and you see where the revenues could go, if the demand is sufficient to meet the supply that is likely to be available, you could get numbers that are higher than that. And so if the numbers are any close to being correct, the stock's 130. It's called like mid to high 30s multiple on a realistic kind of number. It's not that expensive. And I've made this point before. It's much cheaper today than it was before the run started a year and a half ago.
Right, because the earnings
the stock's gone up a ton, but the earnings have gone up much more than the stock. So as long as these numbers are sustainable, but that's the controversy is the numbers have gotten so big so quickly. Like, is it sustainable? That is the question. But for now, like I said before, I suspect numbers are much more likely to be going up versus down.
And is it cyclical? I mean, historically speaking, I mean, the new chip is always gets a high multiple, but over time. They become too cyclical. They get lower multiples as a result because investors don't like the ups and downs. And some of the bulls on this have to say basically that it's not going to be cyclical this time around in order to justify trading where it is and with the expectations where they are. And what's going on with the rest of the industry in terms of supply and demand right now?
Yeah, you bet. So if we look at the rest of the industry, like this will be an upturn year for semis in general, but I wouldn't say it's a healthy upturn. Like memory is going to grow a lot, because memory was horrendous last year, and actually they took supply offline because the demand was so horrible, and because of that, pricing went up, and so memory will be good. PCs and smartphones, they're okay. You're probably not getting a lot of growth, and there's some worries about things like CPU inventory in PCs. Data center, like AI is off the charts, but traditional data center networking and CPUs are pretty weak. Industrial has been weak. It looks like maybe some parts of that have bottomed, but we're not seeing a ton of signs of recovery yet. And automotive is now starting to roll over, maybe in a pretty big way. We've had a number of OEMs in recent weeks have negatively pre-announced in some pretty bad fashion. And so in general, like outside of AI, I wouldn't say that things look fantastic, but AI demand, like I said, right now, it's much more, it's being gated by supply rather than demand. They're selling everything that they can make right now in AI. And fortunately for Nvidia, that's where they are. That's where they play.
Up 2,000% in the past 2 years. One of the great stories. You've got a $155 price target. I think it has a little bit left to go. Stacy, thanks for your time today. Appreciate it.
You bet. My pleasure.
Stacy Rasgon with Bernstein.